What's happening, y'all? It's Mike, the Money Motivator, man. You know how we do every Sunday. Swing trade setup. In this video, I'm gonna give you the trade setup plays that I'm looking for this week. I'm gonna give you a little bit of swing trade education, and at the end of this video, I'm gonna walk you through how to swing trade. Swing trade is more like a passive version of trading, right? Because like day trading, you got to look at the computer, and they really call day trading scalping. Like scalping is like a quick move. Like, okay, well, you know what I'm saying? The market opened at 9:30, but at 9:45, I seen something and I was out by 9:48 or 9:47. That's scalping. But swing trading is something that you could do a little more passively. You don't have to look at the screen. You could do it with a 9 to 5. You know what I'm saying? Place your stop loss or a trailing stop loss. A trailing stop loss is something that will follow your profits upwards, and if it comes down a certain percentage, then it'll get you out of the trade already. So, little safety net for swing trading. But without further ado, man, let me get into the swing trade Sunday. And then afterwards, I'm going to give y'all a lesson on swing trading. So, let's get into it. Y'all know how I do. First, let's look at the overall market. So we're gonna look at the fear and greed index first, right? So with the fear and greed index, hold on, let me close that out. Close out this advertisement. Somebody trying to make money. I ain't hating on it. So with the fear and greed index, you want to be greedy when others are fearful and fearful while others are greedy. If you want to pull this up, just go in Google, type in fear and greed index, and this kind of gives you the sentiment of the market, how buyers and sellers are feeling about the market, because the market is an environment of buyers and sellers. You know what I'm saying? So in order for you to sell, somebody needs to buy. In order for you to buy, somebody needs to sell. So you have to play off of what you think. You know what I'm saying? You got to kind of think a little opposite of what's happening, right? So everybody in the market is fearful. That means people are probably selling stocks, they jump and ship or whatever. So with the fear greed index, if it's fearful, you got to think, you know what I'm saying? Okay, well, maybe the market should go up. If it's greedy, think the market should go down. So far, we feel like the market is going to go up based on the fear and greed index. I know a week ago it was extremely fearful. So this past week we've been going up, but let's look at some other stuff. So far the fear and greed index is telling us we may be going up. All right, so now let's look at the VIX. And the VIX is the volatility index, right? So the volatility index, when it is up, the stock market is going down. When it is down, the stock market is going up. So one key note to really point out with this VIX index, right? This big spike on the VIX index right here, this big green candle, doesn't happen often. We had a rare opportunity in the market. I made some money. I hope y'all made some money, but a little bit of education. When the VIX spikes that strongly, matter of fact, let me scroll back so I could give y'all a little bit of additional education. But when the VIX spikes that hard, the VIX is coming down strong shortly after. So the VIX, the volatility index, is a reversal type deal. So if the VIX is up, the stock market is going down. And if the VIX is down, then the stock market is going up. So if you look at these red candles going down, this is on a daily chart. So each day after that big spike, the VIX has been going down, which means each day the stock market has been going up. So if you was in a swing trade on the day after that VIX spike, that would have just been profit after profit after profit after profit. So this is why paying attention to these other little outside of the market factors or whatever is important. This is why I show y'all the fear and greed index, the VIX, and all of that before I even get into, you know what I'm saying, my swing trade setup or whatever. So the VIX spiked and now the market has been going up, but we do look like we might have hit a little level of support. I want to say that's the 200 MA. So looking at the VIX, it's a lot of lines in my chart. And if you're new to trading, if you stay to the end, I'm going to explain all of this stuff. I'm going to take it out completely, explain each bar chart, each indicator, and all of that. I'm going to go through all of that. But this red line is the 200 moving average, which is a very strong level of support, which means that the VIX is probably going back up because we at this level of support. But on top of that, the RSI, this is a overbought and oversold indicator, right? So when it's up here, it's overbought. When it's down here, it's oversold. If you look at this little blue line here, yeah, it could go past oversold and it could go below overbought. But when it's extremely below overbought, or when this blue line crosses above this orange line with it looks like it's about too soon, then it's signaling a change in direction. So stock market has been going up based on the VIX, based on the fear and greed index. Stock market look like it's going up based on the VIX. It looked like the stock market might be going down. So without further ado, we're gonna pull out some charts. I'm gonna pull out the total stock market index, the VTI. The VTI is a total stock market index. Every stock in the stock market is in the VTI, which is an ETF that holds a portion of every stock in the stock market, right? So let me get out of that. Let me show y'all the VTI. Okay, so the VTI is a total stock market index, and I'm getting mixed signals, kind of, sort of, not really. So usually, in my previous videos, I went over the Bollinger Band. The Bollinger Band is this top line right here. And I hope y'all can see my mouse in this video, but the Bollinger Band is this band that the stock is trading with inside of. Bollinger Band is a real good trading hack because it gives you certain levels of support and resistance. And support and resistance is everything when it comes to day trading or swing trading. So if you notice throughout this whole inside this band, which is the top red line and the bottom green or the bottom blue line, the stock trades with inside that band. Now, if you notice when that big VIX spike that I showed y'all earlier, this green bar that's way down here, closer to the right of the chart, the right side of the chart, it popped way outside the bottom of the Bollinger Band, which the Bollinger Band, nothing in trading is guaranteed. But by it being that far outside of the Bollinger Band, you knew it was going up. You know what I'm saying? So if you would have paid attention to the VIX, or you would have seen that the total stock market was way outside of the Bollinger Band down here, then it would have give you a clear signal we going up without any additional indicators or anything like that. So it looks like we got room to go up according to the Bollinger Bands, but let's look at the indicators. So the stochastic indicator, this one also shows overbought and oversold movement, right? So when it's at the bottom, and this little blue area, you know what I'm saying, underneath the chart, I got 3 different sections. So the stochastic oscillator is the one on the top with the blue and the orange lines. Usually when those lines cross each other, it changes the direction of the market. But also if it's closer or touching this bottom line down here, um the bottom, dotted line within this blue area is oversold, meaning that the direction is going to change. And when it's at the top line, it's overbought. So we are pretty much overbought, and it looked like it could be going, what I'm saying, in another direction. This is the total stock market. Also on top of that, the RSI gives you signals a little slower. I like the RSI over the stochastic because I feel like the signals are a little more definite, but the stochastic oscillator moves faster than the RSI. So I like them both because I feel like the RSI is a little more solid, but the stochastic is a little more faster. You know what I'm saying? Especially with the day trading, you want an indicator that's going to pay attention a little bit faster. So I pay attention to them both just because the stochastic, which is this one on the top with the little blue area, with the blue and orange lines, it moves a little faster. But I feel like the RSI, which is down here, I feel like it's a little more of a, what I'm saying, it's a little more of a definite when you're paying attention to the moves, right? So I also like to put the Bollinger Band, just like I put the Bollinger Band on the stock, I put the Bollinger Band on the RSI. And if you pay attention to this, you can see why. The RSI, the top dotted line within this purple area is overbought, and the top dotted line or the bottom dotted line in this area is oversold. But the Bollinger Bands will give you additional oversold and overbought areas. So if you look more towards the left or to the middle of the screen and you see the Bollinger Band, if you didn't have that Bollinger Band up here, you would think that the stock could come all the way down to the bottom of the purple area. But that Bollinger Band is holding the stock up. You know what I'm saying? The Bollinger Band was holding the stock up. So without that Bollinger Band, the Bollinger Band kind of gives you hidden support and resistance area on the RSI. I tried it on the RSI and I will not trade without it on the RSI. So if you look furthest to the right, and if you look, we are close to the top of the Bollinger Band. We're close to the top of the Bollinger Band. Also, this indicator that I started using recently, which kind of shows you it turns from red to green, I guess, when the stock is expected to go up or go down. So it's really a buy sell signal. So if you wanted to swing trade based off of just this only, you would get in. Hold on, let me pull up the chart. And hopefully y'all can see this. But hold on. VTI. All right, so you would really want to get in if you notice. Okay, we got a cross. Whenever this thing turns green, it's a signal to get in the trade, right? So it turns from green to red. So if you wanted to swing trade just based off of that indicator, you could get in right here because what else is also happening? We're at the bottom of the Bollinger Band on the RSI, right where if you look in between April and May, where this bottom indicator that turns from red to green is, right? When we turn green, we also got a signal right here. We're at the bottom of the Bollinger Band on the RSI. Then if you go here on the stochastic, we're oversold on the stochastic. And then down here, we're at the bottom of the Bollinger Band going up. So when you add all of these together, that's a perfect swing trade just based off of these indicators, right? You get in right here. You got the this indicator turning green, the RSI at the bottom of the Bollinger Band, the stochastic oversold, and the stock trading at the bottom of the Bollinger Band. So if you were to get in right there where this thing turned green and get out where it say to get out, you really could have did a swing trade, you know what I'm saying, a couple of days, really from May to mid-June. And you know what I'm saying, that would have been thousands of dollars, you know what I'm saying, passively. You don't really have to watch swing trades like that. You really got to watch your entry. But without further ado, man, we're going to get into the charts and I'm going to show y'all my potential swing trade aspects for the week. And then after that, I'm going to go into a little bit of swing trade education just for, you know what I'm saying, people that are watching and all of this is confusing. I'm gonna really get into it. So to be honest, the market has gone up crazy within the past week, and I don't really have any good swing trade prospects. Um, I do have one possibility, but I'm not gonna throw no money at it. But I'm gonna show y'all just for study case purposes, right? So let's pull up the one stock that I found. Let's pull up the one stock that I found. All right. All right. So, all right, I gotta switch this. All right. So the one stock that I found was Google, aka Alphabet. And like I said, this is not a swing trade that I'm gonna do, but this was the best I could find. And I'm gonna explain why I like this trade. Um, and we're gonna go back over it next swing trade Sunday. This is the only one I really came up with. But as far as swing trade, since I'm not really confident on the swing trade, I'm gonna give y'all some real nice day trade plays after this. And then I'm gonna go into a little bit of swing trade or day trading education at the end. But so the reason why I like this one is we are, if you look at the 200 moving average, which is the red line towards the bottom of the chart, that line is in an upward trend. So whenever the 200 moving average is in an upward trend, that means the stock or stock market or whatever is in an uptrend, right? So that's one reason why I like it. Also on a stochastic oscillator, which is this, you know what I'm saying, the blue and orange line underneath the chart, the first section of indicators. When that blue line crosses above the orange line, that is a bullish signal. Sometimes it's temporary. It might be for a day, it might be for half a day or whatever, but it has recently just crossed above that orange line. So we go to the RSI. When usually with day trading, right? So with when you trade in a stock, with inside the Bollinger Band, you have the 20-day moving average, and the 20-day moving average is it's a real good moving average because the 50 and the 200 are real solid levels of support and resistance. But 20, anything less than 50 and 20 are really strong support and resistance, but anything less than 20, anything less than 50, it plays it closer to the movement. So the stock is going to move real close to the 20. So the 20 is real like a perfect day trading thing, but if it's within the swing trading, then it makes it even better. So with inside the Bollinger Band, this little small orange line where the stock kind of is currently is the 20 SMA or EMA, whatever it is, either one of the 20 moving averages. I don't know if it's the easy moving average or simple moving average or whatever, but that 20 moving average, and it looked like it kind of popped above it a little bit. So it looks like we might be above that moving average, but on top of that, if we're looking at the RSI, which is I got three indicators at the bottom. The stochastic is the top one, which I just went over, and the RSI. So when you put the Bollinger Band on the RSI, it is a bullish signal, meaning you could swing trade off of that one signal. Now everything else got to play out, and that's why I say this is iffy, because none of these candlesticks or candlestick patterns really tell me that Google is really going to go up like that. But based off of the stochastic, which is the top indicator, it crossed above the orange line. The stochastic, the RSI, which is the middle indicator, when the line crosses above the middle line of the Bollinger Band, that is a bullish signal as far as, swing trade, day trading, whatever. But on top of that, this indicator that I got on the bottom, I want to say it's the smooth MACD or whatever. I stopped using the MACD. I kind of like this one better, but it's the smooth MACD or something like that. But this bottom indicator that turns from green to red, look it up for yourself. Try it out. I like it. I like it over the MACD, but it has turned green a couple days ago and it's still green. So if you pay attention and you look, let me go back to the chart to really show y'all. So you pay attention and you look right here, when it turns red, that stock went down. I mean, if you would have did a put swing trade on that thing, when this thing turned red, like not mid-July, but probably a little before mid-July, when that thing turned red right here at the peak of the Bollinger Band. See, this is why there has to be multiple things to line up. You got, hold on, let me go back to the chart. So right here is where you have the transition from that smooth MACD or whatever that indicator is called. It turned to red, right? But on top of that, the RSI, which is the middle indicator, then crossed the middle line of the Bollinger Band, and the stochastic also crossed going down. Also on the stock, we're at the top of the Bollinger Band. That's an easy swing trade going down. I don't really swing trade stocks going down, but if you look at the chart, if you look at these indicators, it's really gonna tell you a story, and the stock is gonna give you clues to what's next. But that is my best case for swing trade. I'm actually not planning on doing any swing trades next week, but I am gonna do some day trades, and I want to give y'all some easy setups on which I got two stocks which really seem like giveaways for day trading. So I'm gonna pull those up right now. So I could let y'all know what's happening. Um, and then I'm gonna go over a little bit of swing. You know what I'm saying? So first one I got is Starbucks. Hold on. Come on now. All right, let me make sure y'all can see this. All right, so I got Starbucks. So if you're looking at, hold on. So if you're looking at Starbucks, my screen started tripping. I did something wrong. Dang. All right, let me just cancel out of that. I'm gonna get this fixed real quick, y'all. Real quick. All right. So Starbucks. All right, let me share this with y'all. So Starbucks, I would definitely day trade Starbucks. I mean, you could probably swing. I'm not gonna lie to y'all. I'm not comfortable with swing trading on the downward trend. You know what I'm saying? I make money in either direction, whether the stock is going up or down. But swing trading, I just I don't know. I guess because I know the stock market goes up over the long term. So I have a crutch of I don't swing trade going down. But if I was to swing trade going down, this might be a good prospect. And I'm gonna tell you why. This is solely based off of indicators and and gaps, right? So most of the time when a gap is present in a stock, and what I mean by a gap is if you look over to the right where okay, so you got four E's on this chart. The first E is a green, the second one is a red, the third one is a red. So E is when the company reports earnings. And you always going to see these big movements when a company reports earnings cuz the company could the company are going to project what type of earnings they think they're going to that the company is possibly going to make in the next 3 months. If they beat those earnings, in a lot of cases the stock may go up, but the stock market may be expecting them to do better and they could go down. Earnings reports are very risky to trade. I did good on one and I did bad on the other, so I know I stay away from them. I'm 50-50 with earnings reports. But these E's are earnings. So what you see is that it makes significant movement, right? So if you play the opposite of earnings, don't actually play earnings, but allow it to, you know what I'm saying? We like to react to the stock market and not forefront or jump in front like, oh, Nvidia, Apple, Amazon is going to beat earnings. Yeah, they could beat earnings, but if the stock market is expecting Amazon brand new soap to make big sales, but they've been killing it everywhere else, the stock market going to tank the stock, and you like, okay, well they kill earnings, but the stock still went down. So Starbucks, it went down. So how do you play that? If you look at these indicators, it went down. Now it's way outside of the Bollinger Band. But going back to the reason why I'm showing y'all this is that gaps usually get filled, right? So we got two gaps that have not been filled. And gaps don't always get filled, but now Starbucks has two gaps, right? Starbucks has a gap here. That was earnings. Whether they beat earnings or missed their earnings expectations, the stock gap down. So now we're expecting it to go up. It went up. It still didn't close the gap because it made a peak here. It made a peak here, but the gap is still up here somewhere, right? So Starbucks didn't close the gap, which all gaps don't get filled. But now we got two gaps. We got this gap back here when they reported earnings. It looked like they reported earnings again and they beat this time, but either what is it, a daily chart? So sometime this week, Starbucks gapped up like crazy. So now we got two big gaps to fill. On top of that, it's at the top of the Bollinger Band. The RSI is oversold. The stochastic is oversold. And if you look at the smooth MACD on the bottom or whatever the case is, it's looking like it's about to change colors to the red. It look like it's about to cross over. So Starbucks would be a easy day trade option, put option. And I'm gonna give y'all one more I gave y'all my best case scenario on a swing trade. I'm gonna give y'all one more, which it was Starbucks, and I'll give y'all one more for put options for next week. So put options is betting on the stock to go down. And when you're day trading, you don't want to be in the trade long. You could get a couple hundred, depending on how much you're trading with. You could get a couple hundred, you get a couple thousand. You could get a year's salary in one trade. It really depends on how much you're trading with, but trading doesn't, the idea of trading or scalping is just to be quick, fast, in a hurry. You see profit, you take it, and you go. If you got a 9 to 5 or a side hustle or a date or got to go to the library to return a book, just spend your little 30 minutes of getting your quick 100 or quick 1,000 or whatever, and take off. Just disappear from the market for the day. Um, but I was gonna show y'all another stock, so let me do that. I got one more that I like a nice put option on. Um, and if the stock market gaps up in pre-market, if the stock market gaps up in pre-market, meaning like the stock goes up before the stock market even starts, then that's even better. That means I like the stock even more. You know what I'm saying? So my next one is Walmart. Walmart gapped up heavy on the earnings report. So if you were to play it, you know what I'm saying, ahead of time, you wanted to swing trade Walmart before the earnings report, you would have hit. You would have hit. It would have been nice. But I like to wait. So my smooth MACD down at the bottom, it still looked like the stock may have more room to run. But according to my RSI and my stochastic oscillator, it looked like we're overbought on Walmart. So it's above the Bollinger Band, the RSI, the stochastic is overbought. I'm looking at Walmart as another put option. So this week, I don't really have no perfect swing trade setups. I gave y'all a potential one just to be like, you know what I'm saying? Google might do something. But to be real, I really like Starbucks. I really like Starbucks and Walmart to go down. How far down? I don't swing trade down. I like, you know what I'm saying? So when in the stock market, you know what I'm saying, pick up multiple skills. But if you don't have the time to day trade or anything like that, then you know what I'm saying, you could learn the swing trade puts. I don't do it, but you could also wait. You don't always have to trade. You trade when you feel like you're gonna make money and it is necessary. So, with that being said, for all my swing trade setup folks, you know what I'm saying? That's it. I'm tapping out. And for all my newbies, for all my new folks that don't really know much about trading, I am going to make my chart butt naked and explain everything. All right, so we're gonna go back to Walmart. All right, so this is a little educational purposes for my people that, you know what I'm saying, watch me just for the love of watching me or whatever the case is, but don't really know what I'm talking about when you swing trade. So I'm not sure of the exact amount, but when you are day trading or swing trading in the stock market, I I want to say it's somewhere times 10. So the stock go up like, you know what I'm saying? It's either times 10 or a times 100. So if the stock go up like 1 cent, that's a really good profit off of 1 cent when you're day trading. So swing trading, right? So if you were to swing trade Walmart on their earnings report, which is this E down at the bottom, Walmart beat earnings and the stock jumped up. So, just for example, if you were to swing trade Walmart on the earnings report and the profit was times 100, it went from 68 to 74. That's about $6 times 100, right? So, that's your profit off of just placing an order. The stock market closed at 4. So, you were to place that order at, I think the last time you could place an order is like 350. You know what I'm saying? So you place an order at 350, and then when the stock market opened the next day at 9:30, you get out of the trade. Hundreds or thousands of dollars by just placing orders and knowing when to do it. It takes skill. So without further ado, I'm gonna go into a little bit of education. So you have red candles and you have green candles. The difference between the two is the bottom of the red candle, the top of the red candle is where the stock market started. The bottom of the red candle is where the stock market finished on that day. When you're looking at a daily chart, you have a daily chart, 5-minute chart, 4-hour chart. Each candle represents the time that you're looking at. But the best time frame to look at for swing trading is the daily chart. So that's what I'm going over right now. I like to day trade on the 5 and 2 minute chart. So I will look at the same stock on the 5 and 2 minute chart when I'm day trading. But swing trading, you want to look at the daily mostly. I look at the 4-hour, weekly, monthly, all of that too. But the daily chart is the most important with swing trading. So on these candles, let me see if I could actually pull the screen up or see if I can actually like show y'all for real. Um so on these candles with the red candles, like I said before, the candle starts at the top of the candle and it ends at the bottom of the candle. That's a red candle. Now on the green candle, it starts at the bottom of the candle and it ends at the top of the candle. So what that tells you is that within a day, the buyers outbeat the sellers, and on a down day, the sellers outbeat the buyers. But on top of these candles, you have little lines on top of them, right? So with all candles, of course, you're gonna have wicks, right? So looking over to this candle right here, and I hope y'all can really see it. The first candle after earnings on May the 16th, right? That is a hammer candle. A hammer candle in most cases is a reversal candle. So if you want to swing trade the hammer candle, it's really a good idea to catch it at a bottom of a downtrend. So if you're catching at a bottom of the downtrend at a level of support, the RSI is oversold, the stochastic is oversold, the smooth MACD is now turning green. That's a perfect time. You got everything aligned to be like, okay, this is the time to do a swing trade. But it's not at the bottom of a trend. However, even though it's not at the bottom, it goes up. So ideally, whenever you see this candle, this hammer candle, which looks like a long body, a small body with a long wick underneath it. And what that means is the stock price didn't really change much from the point that it opened. It made a lot of motion throughout the day. Like it opened here at like probably 63.97. It went all the way down to 62.77, but it closed at the end of the day at 4 p.m. at 63.77. So the stock really didn't make a lot of motion. It was a real battle between buyers and sellers. It looked like sellers was going to take the lead on that, and buyers pushed the price back up. So it's showing that sellers looked like they was going to take the lead, but buyers really push that situation back up. So on a daily time frame, when you see certain candles, it will give you an idea of where you think the stock market will go. So vice versa, if you have a hammer candle that's upside down with this wick, with the wick pointing back up, like I guess over here where they last reported earnings, you see that next day the stock market went down. There was a red candle beneath that candle on the wick. So single candles on a daily chart can give you an idea, but if you add the Bollinger Band, the stochastic oscillator, the smooth MACD, you have to have so many different things aligned to really be like, okay, this is gonna go. And you don't put all of your profit up at first. You know what I'm saying? You use the 2 minute and a 5 minute time frame to kind of time when you want to get in that swing trade. If the day before you identify, okay, this is going to be the day that I want to swing trade. Okay, well, you get in that swing trade when it's perfect timing for the day trading, because the stock could do anything during a day's period, 5 minute period, whatever. But if the stock crashes and you do mean reversion trading, because the stock always reverts back to a mean. And if you stay locked, I'll go over mean reversion. That'll probably be my next YouTube video or whatever. But the stock always comes back to a mean. So that's why I'm confident that Walmart and Starbucks is going to come back down because of mean reversion. They have to come back to a mean. If it goes too high, it has to come back down. If it goes too low, it has to come back up. So that's my plan for Walmart and Starbucks. I think it's Starbucks, but if I'm wrong, y'all rewind it or revert back to that. But each candle tells you a story. So a single candle is important on a daily time frame when you want to swing trade. A single candle is also important on the 5 minute or 2 minute time frame if you're day trading. But the single candle is only important if it is touching a level of support or resistance. So now let me go into support and resistance on the chart. So now I'm going to add indicators, right? So if you can see this, let me make sure y'all can see this. These are my saved indicators: the 9 moving average, the 20 EMA moving average, the 50 moving average, and the 200 moving average. Those are support and resistance levels. Those are moving averages for a 9 period day, a 20 period day. That's how the stock moves within that 9 period or 20 period day. So if you add that onto the chart, those can play as levels of support and resistance. So let's go back to the chart. So hold on. So we go back to the chart. Now we can see the levels of support and resistance. So if you look, the stock usually likes other levels of support and resistance even better. So if we go to, let's look at this right here. So we got a hammer candle. This is a beautiful example. We got a hammer candle touching, what's that, June? On June 25th, on a Tuesday, we got this hammer candle touching this moving average, the blue moving average. I don't know. It might be the 50. I don't know. I know this purple down here is a 200, so the red is a 50. So the blue might be the 20. The 20 is actually one of my favorite moving averages. The higher the moving average, the more significant of support and resistance level that it is, right? So now you have candlesticks on top of a level of support and resistance, right? You have moving averages. and the stock always respects the moving average. So it doesn't only just play the moving average as support and resistance, it also mocks the what you call it, it also mocks the trend. So this is how you could tell a trend when the stocks are crashing and people are like, oh, the trend is downward. Like, you know what I'm saying? You look over here, and you look right here and the stock is going down, and people could be like, oh, it's a bear market. Well, it's not a bear market because all of the moving averages are still pointing upwards. So instead of it being a bear market, it's just a mini correction. Stock markets go through corrections all the time because they go up like crazy, and sometimes there ain't no reason for them to go up, so they get overpriced, so they recorrect themselves before going back up. So the slope of the moving average also gives you an idea of what direction the stock is should be going into outside of the VIX or the fear and greed index, right? So now you have the moving averages, which plays as support or resistance, but it also lets you know what direction that you should try to trade the stock in, right? So outside of the moving average, you also have the Bollinger Band, which I love the Bollinger Band. So the Bollinger Band is this red line at the top where you see every time the stock touches it, it comes down. Sometimes it goes outside of it, but it easily comes back in. So this is why I think Walmart is going to come back down, because I know the Bollinger Band is one of my favorite indicators. And if you look back here where we had this hammer candle kind of showing that the stock will probably go up, and the next day that it did, it made its way back inside of the Bollinger Band. So we are definitely outside of the Bollinger Band. Walmart should be coming down, but this is how it's a perfect the Bollinger Band is one of the best indicators to really test the range and how far the stock is really gonna go. It'll bust out. Sometimes it'll pop out of the Bollinger Band or bust down below. But if it does, you know that it's going to be invited right back into it. So now we got the Bollinger Band and the moving averages. On top of that, the 20 moving average is in the Bollinger Band. So it was already on the chart. It probably didn't change much, but the 20 moving average is within the Bollinger Band. And if you look, usually on a smaller time frame, especially the 2 minute time frame, that middle line, which is this orange line in the middle of the Bollinger Band, the 20 SMA, is a great level of support and resistance. And if you look at it, it will hug that line. So when you're day trading or swing trading, what you could do is let it ride that level of ride that support. And as soon as it breaks it, like, you know what I'm saying right here, let me make sure y'all can see what I'm talking about. But when it breaks that level, then now you can exit the trade. Like right here, it broke that 20 SMA, which is the middle line of the Bollinger Band. This is a perfect time to exit. You know what I'm saying? And you can ride it up off of that. But always keep in mind, there's nothing guaranteed in the stock market, right? So with that being said, I'm gonna go to my next indicator that I like to use. And if you look, I got I got them all started up. So I like pivot points. Pivot points, it's not my most favorite indicators, but I do realize that sometimes stock pop down or pop up from the pivot point, right? So if you look, we got certain areas where the stock will pop up or pop down from the pivot point. So it's just another level of security when you swing trading or day trading. Like, okay, this is another level of support or resistance. So if you win a swing trade, it's an easy way for you to either get in or get out. If you look on my pivot points, it don't respect it all the time, but it's not a bad indicator. I really like the pivot points, to be real. So take a look at this, screenshot it, whatever, put the pivot points on your chart and try it out. I don't think you'll be disappointed on that one. So now let me go back to my next indicator, so I can explain that one. Is the normalized smooth MACD. The normalized smooth MACD is really self-explanatory. When that thing turns green, you buy. When it turns red, you get out. I love it. I love it. I really haven't been using this indicator until about, I don't know, we're gonna say, I don't know, probably 2 months ago, something like that. But this indicator is, it's a good indicator. I to be honest, I like it better than the regular MACD. The MACD indicator moved too slow for me. I feel like the stochastic oscillator and the RSI is a little more accurate. But this one is a little more self-explanatory, but I like it too. It's not as fast as the stochastic and the RSI, so I'm gonna go over those next. But if you notice, when it turns red, the stock is going down. When it turns green, the stock is going up. It does have little areas where it might pump fake you, you know what I'm saying? It might be a little change in color or whatever, but if you use your other indicators, the market sentiment, fear and greed index, VIX, all of that, then you know what I'm saying? Hopefully it'll be an additional part of your trading and not something to confuse you. So let me go into my next favorite indicator, so I can explain that. The stochastic. You don't want to get caught without your stochastic. So the stochastic oscillator shows oversold and overbought. It is a beautiful indicator because it has clear levels. You know what I'm saying? And you can always match the stochastic with the Bollinger Band. So within this blue area right here, at the top is overbought, at the bottom is oversold. But also with the blue and orange line, when they cross each other, that's a pivotal moment. So if you can look, let me go back to the chart. So if you can look and you see it cross here, if you look and you can see it cross here, that was a pivotal moment for the stock. It crossed here, it was a pivotal moment for the stock. So when the stochastic crosses, it's a nice pivotal moment for the stock to change in direction. So laptop look like it's finna die. So I'm gonna hurry up and get through this. So y'all could be on your way. I already gave y'all my swing trade setup for the, or lack thereof, swing trade setup. But um let me hurry up and get through these indicators. So volume. Volume is very important. You do not want to trade without volume. And volume is these bars down here at the bottom, these green and red bars. And what that lets you know is the participation. Really important for day trading. If you see increasing bar levels, whether red or green, that shows you the participation. You want to go with the participation. So if the green bar is increasing and consistently going up, that means people are buying the stock. So that's another reason for you to jump on the bandwagon and collect a little bit of profit while that bar is getting really high. So if you notice there, if you notice the bar has, you know, certain peaks or whatever, but when you're day trading, that volume bar is very important. It shows you actual, these other things are kind of like, okay, well, it may hit support, it may hit resistance, but the volume shows you actual participation between buyers and sellers. Don't want to get caught trading without volume. um so let me show y'all my other indicators that I like. The VWAP. The VWAP is very important. For some reason, when I'm in on a daily chart, I never see the VWAP. So let me go to the 5 minute time frame so y'all can see what I mean by the VWAP. So the VWAP is going to be these green lines that y'all see. Um, And the VWAP is one of the realest levels of support and resistance. If you could see these green lines, there's two of them. Literally at the bottom, or if you look over to the right, you got you got the candle touching the bottom. The last two candles on this time frame, you got one touching the bottom of it and one touching the top of it. The VWAP is a very strong level of support and resistance. If you need to screenshot this to look and see, like just this day within Walmart, just Friday, you see that the stock held above the VWAP. That VWAP was a nice level of support. And then it even tested the top of the VWAP and pushed back down. It literally the whole day it stayed within the VWAP, which is the volume weighted average price or something like that. But you got those three green bars that are perfect levels of support or resistance. So you know what I'm saying? You probably could get initially. I'm not gonna lie, with all these indicators, I kind of confused a little bit, but if you just wait for the perfect moment, then everything ain't gonna get confused. And that was my biggest problem when I first started trading is rushing to get that money. Let me get these $500 right now, but you gotta wait. So I went over to VWAP, volume, stochastic, um, RSI. This is gonna be the last one, and I love the RSI. So the RSI, let me make sure y'all can see this. The RSI also shows you overbought or oversold. You got a purple line and a yellow line. When they cross each other, that shows a change in direction. Hold on, let me go back to the daily because we talking about swing trading. But the RSI is one of the best indicators. It also shows overbought and oversold, but I'm gonna show y'all my favorite trick on the RSI. So yes, the RSI shows overbought and oversold just like the stochastic, and the stochastic moves faster than the RSI. So the stochastic will give you a signal better than the RSI, right? But this is my trick that I like to do on the RSI, and I don't see nobody else doing it. But y'all know I love the Bollinger Band, right? So before I close out, okay, so now the RSI has a little bit of more restriction when you put that Bollinger Band on it. Because if you look at the top of the line right here, you got three dotted lines on the RSI, the top, the middle, and the bottom. The top is overbought, the bottom is oversold. Oversold means you expect the stock to start going back up. Overbought means expect the stock to start going down. But the RSI has its own limitations. So if you don't have that, the Bollinger Band. So if you don't have that Bollinger Band up, you didn't know that, right here in March, that it was just going to come down right to that spot. You could have expected it to come all the way down, but that Bollinger Band shows you tighter restrictions on the RSI. And since I love the RSI indicator so much, it shows very strong signals, especially with day trading when you want to do divergence. And if you don't know trading divergence, watch some of my last swing trades. Sundays divergence is one of my most favorite swing trades. The RSI is my favorite indicator for divergent swing trading and stuff like that. So with these Bollinger Bands, not just on the stock pricing, but also on the RSI, man, I just gave y'all the swing trade setup. I just gave y'all my day trading plans for next week, and I gave y'all my indicators and all of that. So you know what I'm saying? This free game, man. Take the money. I know I'm gonna take the money tomorrow. Next week I'm gonna have another swing trade set up, and I'm gonna come at y'all a better day trading education. Y'all like and subscribe.